Hey guys, Ryan G. Wright with DoHardMoney.com coming to you live with the Just Ask Ryan question of the day. And today's question is, what are hard money loan requirements? Basically, what does it take to actually get a hard money loan? What are hard money lenders looking for in order for me to be able to qualify to get a hard money loan? We're going to deep dive into that. But if you have a question you'd like to have me answer, this channel is about real estate, investing. It's about our relationship with money. It's about wholesaling. It's about fix and flip. It's about hard money lending. It's about rental properties, all things real estate, investing, and more. If you've got a question on any of those topics, type them in the comments below, and I'd be more than happy to answer it. And please consider subscribing as well. So hard money is a little bit different, right? There's a difference between hard money and going down to the bank. Hard money is not going to Wells Fargo or Bank of America or Chase or name your favorite bank or credit union along the corner. You see, those banks or credit unions are looking for you to fit in a specific box. And the reason they're looking for that box is they want to be able to sell that paper or have the ability to sell those loans to Wall Street. So what they're doing is they're saying, here's the different boxes and we have to fit you in, which is why they look at credit score, which is why they look at income, which is why they look at debt to income ratios, which is why they look at the property to make sure the property is going to fit into one of those specific boxes. But if it doesn't fit in those boxes, they say, I'm sorry, we can't give you a loan because we can't recapitalize. You see, what a bank does is they make a whole portfolio of these boxes, and these boxes, and they sell it out on the secondary market, recoup their money so they can go lend again. Now, sometimes they'll retain servicing, meaning they'll collect the payments. Somebody else owns the loan, but they'll collect the payments and give that payment to the investor and make a spread based upon that. And that's how the world of mortgage banking actually works. Well, that's not what it's like with hard money lenders. You see, hard money lenders can't sell their loans. A hard money lender has to retain their loans, which means the prices are a lot higher. Secondly, the hard money lenders can't borrow money against the government for low interest rates, which makes the prices higher. Also, hard money lenders are willing to lend on properties that are not in good condition, meaning it may not have a kitchen, the driveway might be beat up, the roof might need to be replaced. Any of those things would disqualify you from getting a traditional loan from a traditional bank because they want to make sure the property's in good condition or they can't sell that paper to the secondary market. It doesn't fit in the box. So the hard money lender doesn't care about your debt to income ratio. Hard money lender doesn't care about your job or your credit scores or any of those things. They care about the equity that's going to be in the property. Now that equity can be there right now, or that equity can be created through doing rehab on the property. That's an as-is versus an after repaired value, looking at both ways. But a hard money lender is looking for equity. They don't really care about you. They care about the hard asset, which is where the name hard money comes from, is lending based upon the asset rather than the individual. Now that said, we're going to want to make sure as a hard money lender, we want to make sure you're not wanted by the FBI, you can pass a background check, and we want to make sure you don't have like collections or judgments or you're not in the middle of bankruptcy. But if you don't have those things, a true hard money lender, as long as you have a good enough deal, is going to be excited to lend to you and say, I'd be happy to lend to you on this property because there's enough equity if this goes bad. What is happening is my security is in the property, not you as the individual. Whereas a traditional bank, their security is in you, your ability to repay, how long you've had a job for, how long you've been holding down that job, your debt to income ratio, and those types of things. And so a hard money lender is not looking at all that. So the profit potential, let's talk a little about profit potential on deals. Is really going to be determined by how good of a deal that you have. And that's one of the things that hard money lenders are going to be looking for is, do I see a way that he can make profit? We talked a little bit about credit scores. There's not like I have to have an XX credit score. What it is no collections, no judgments, no bankruptcy, not in the middle of a bankruptcy. Also, hard money lenders, some hard money lenders are going to want to see great experience. Other hard money lenders are going to say, as long as the asset's good, we'd be interested in doing it. As far as down payments, when it comes to hard money lenders, that's really going to vary. The less you're putting down, the more risk the hard money lender's taking, the more expensive that money is going to be. The more you're putting down, maybe the less it'll be. But it's not just about experience. It's about loan to value. It's about the property. It's about a variety of different things. But in the end, if you've got a good deal and you need to close fast and the property needs work, a hard money lender is going to be the way you are going to want to go. That's how this works when you're dealing with investments. Now, I was talking to a borrower just yesterday who was a little bit disappointed that the rates were a little higher than what he saw on billboards on the street. And it's really important to realize hard money lenders don't get their money from other places, they've got to make a return. And so you're going to see, at a minimum, you're looking at double-digit interest rates, regardless, is going to be the minimum you're going to be looking for. So, with all that said, if you have found this video to be useful, please give it a thumbs up. It tells me I'm doing a great job and you're enjoying them, and I want to make sure that you're getting value out of it. As I said before, if you've got a question you'd like to have me answer, type it in the comments below. I've got a couple other great videos you're going to want to check out. One is conventional loans versus hard money loans, so check that video out. I also have a blog post that you should look at. It's how can I finance a house with bad credit? I will link to that in the comments below. That said, if you want some help in real estate investing on whatever level that may be, check us out over at dohardmoney.com. We've got some amazing great programs that we help people through the phases of preparing and learning and finding. We've got tools and resources on each one of these, help people value, negotiate, get properties under contract, go through the purchase, the rehab, selling the property and profit. If any of that is of interest to you, check us out over at dohardmoney.com. Otherwise, make it a very profitable day, and bye for now.